Bad Trader is back here. Going to look at some charts now and do some hardcore charting. Basically, I'm going to study this whole rally first. As you see here, this is the SPY 15-minute chart. I'm trying to diagram some of the stuff that I think is market manipulation. Even I'll go as far as saying here's the initial rally. We were struggling to hold on to the 104 area. As you see here, we had a positive divergence with the MACD being higher. Then we had this moonshot. We had a was it an intraday kind of we had a gap and then another gap on top of that. I mean, you went up 30 points, 35 points in the first day. And as you see here, look at the MACD. Basically, it was a huge short squeeze because everybody was betting that this market was going to break down. It didn't, and the next day you it looks like you had this MACD pulling back pretty hard, but prices still rose this next day, and the following day you got another huge gap up to 110.50, and as you see here, the MACD is lower. It's lower so many times, and price still remains high. Basically, the negative divergences are an issue. I mean, it could wind up resolving. You could wind up getting more upside before the divergences pan out. That's why you gotta pay attention to more than just that. You really would want to see a breakdown below this this level where the rally started, and you haven't done that yet, and that's probably why you haven't had any severe tanking. As you see here, also you had lower highs on the RSI throughout most of the rally too. Besides that first day, you had good RSI, and you had good RSI again here. It hasn't gotten that high again. So you're also seeing a lot of things in this 15-minute. The moving averages are all converged right now, and you almost have potential switching from a bull to a bear alignment. Right now everything's still bullish, but the 100 from the 18 is only 22 cents right now. So with a push down to start today, Monday, you could easily get get that bear crossover. You have lower RSI highs over here, several of them over on the course of Friday's trading. I'm going to look at the hourly next. The hourly here, you had this trend line I drew from 109, SPY 109. It looks like we cracked it. As you see here, a lot of these candles were threatening to break it, and then we cracked it with the last hour of the day on Friday. You've been having the MACD has been coming down. You had the high when the SPY reached 110.50, and since then you've made higher highs in the SPY and lower highs in the MACD. So that's something to watch here. And as you see here, the last hour of the day on Friday had some big volume, and it was a down candle. You also have the stochastic. Looks like it's potentially breaking down right here too. It pulled down here. It rallied back up, came back down, another lower high here. Now we're just waiting for the lower low to be confirmed, to drop below, the high 40 area would signal that. And basically, I think you could potentially have some big downside if you can break the MACD low back here when the rally started on the hourly. That would be negative 0.25 approximately. So you're looking for that. This is something to be cautious of if you're a bull. If you look at the UUP, seeing some potential positive things here. First of all, you never took out the early August lows. You have some positive divergence setting up here still from this MACD low way back here, and you turned up higher over here. So if you're bullish, you'd like to see this MACD continue to rise and cross the zero, and it could probably whipsaw, and maybe you could be forming some sort of double bottom here, and you could take out this 2420 area to the upside. And that would probably be, coincide with a market sell-off. If you look at the VIX hourly, seeing some positive things here on the RSI here. As you see, we're making some higher lows and higher highs on the RSI. Same thing here. Look at the MACD. Nice. You did have a crossover above zero, but now you're back below. But you're very oversold. You have this nice positive divergence setting up, this double layered positive divergence. If you turn up from here, I'd be looking for this 23 area to get taken out, and I think you could run the 25, 26 on the VIX in the near term very easily. That would be very that would mean that you would expect a decent pullback if that occurs. The Chinese market, as you see here, this looks like it's also breaking down. You've had that resistance at the 2700 level, similar to our markets right now. You could say that maybe they're ahead of us. They've went up to 2700 almost 4 times. You could say exactly that level 3 times, and it looks like there's it got rejected there the 3rd time. You have this negative divergence with the MACD. Stochastics turning down 27 and 51, and right now it's like 12 o'clock p.m. Eastern time, and China was down a little more before. It's down 1.15 points, barely fractionally down, but it is down, and it's as you see here on this chart, you're below the 100-day moving average. So you're below all the key moving averages, even though you have bullish alignments with the moving averages. You just had the 45 cross the 100, even though the 100 is declining. So you want to see if this MACD continues to spiral down, and maybe you get like an embedded status, happening with the. You want to see if this 2570 area or so gets breached to the downside. That would pretty much confirm that this area is gonna break, and we're gonna correct. And then maybe you look for a higher low to be made with a bounce, somewhere above this 2300 area that where it hit before. Conversely, or this could have just been when the RSI doesn't get up to 70 completely, and a lot of these bounces are just bare bounces. Really, in the 60s, 65, 66, they say is still a bare bounce as far as RSI. And you see here, that's pretty much what we did, and this could just be a very big bear market rally, and this could be just heading on down to new lows in the near future. So that's something to watch too, because China is pretty much the economic driver for most of the world, and their markets look weak. So that's something to take notice of. I like. What I liked for the bear case is that I looked at a lot of these charts, and I'm seeing things, big markets that are looking like they want to roll over. Here's the same thing with the BKX. You got the MACD threatening to curl over here and not take out its previous high here. Even if it did, it wouldn't be the end of the world. You have the histogram ticking down. You got 4 bars in a row now down. Your RSI is coming down. You're in a 53 reading now. Stochastic 80 and 84, about to lose that embedded status, and you don't have the 18 crossing the 45. If you get another down day tomorrow, you could be testing this, making a run for this 18-day moving average. And I think if you test this 18-day moving average, I think there's a good chance that it fails, and then you could just say, oh, this is just a bear market rally in a very in a bear market. So that's something to consider also.